Hey everybody, it's hwsteele, and today is March 16th, 2021, and this is the third weekly video for the month of March. And this week happens to be spring break. So I've got a lot going on with the kiddos and myself, the family, so this is going to be a very short video. But I wanted to get a video out and ask you a question, kind of do a bit of a survey. The question is, how many things do you have in your trading plan to keep you out of bad trades? And a follow-up question, how many good trades does that wind up keeping you out of? And I'll give you a quick example right here. This is the Euro US dollar. It's a 1 hour chart right here. And suppose you trade breakouts, right? And so you got a high right here and a low right there, and you want to trade anything that breaks out of there. Now I realize that's not probably the best series of lines to draw on the chart as far as breakouts go, but it gives a perfect set of examples here. We get out here, the market closes right above this line right here, so if you go long, you'd immediately be stopped out, assuming you put a stop somewhere around there. So in other words, you close above your line here, which is your signal to go in the direction that you closed in, which is up, and then the market goes opposite of you. Here we close below the channel, and that's your signal to go below or to go short the market, and the market turns around and goes right back up. Here we get a close right in this bar that is above the line, which is your signal to go long. We get a bit of a pullback, and then we move up. So theoretically you could have a successful trade right there. So in other words, we had 3 entries right there, but only one was good. So then you think to yourself, okay, I'm going to put a stipulation to the breakout. I'm going to add another rule to it to help eliminate bad trades. So you might say, okay, I'm going to wait for the market to close above or below the line. I'm going to wait for a pullback, and then I'm going to wait for another candle to close above or below the one that broke out. So here we get a candle that breaks out, we get a pullback, but then we never get a candle that goes above there, so we're saved this theoretical bad trade. Down here the same thing happens. We break out to the downside, we get a pullback, but then we never come down here again after the pullback, so we're saved this bad trade. Come up here, eventually on this candle we close above the line, so that's signal number 1. We get our pullback, and then we get this candle which closes above this candle, so that's our second part of our signal that we look for now, and we get a good trade. So in theory, adding that one extra rule saved us 2 bad trades but kept us in the good trade. So that's basically my question, is how many of those kinds of rules do you have in your trading plan? And how many times has it wound up keeping you out of a good trade, something that would have wound up being a good trade? So anyway, if you feel like answering that question, please do so in the comments section below, and I'd appreciate it. And until next week, this is hwsteele. I hope everyone has a wonderful week.